Science of Getting Rich says, behind your clear vision must be the purpose to realize it, to bring it out in tangible expression. And behind this purpose must be an invisible and unwavering faith that the thing is already yours and that it is at hand and that you only have to take possession of it. That's what price targets are about. Although the book is not about trading, the book will, what's up, baller? The book will definitely help you with trading. The Science of Getting Rich. Behind your clear vision must be the purpose to realize it, to bring it out in tangible expression. And behind this purpose must be the invincible and unwavering faith that the thing is already yours, that it is at hand, and that you only need to take possession of it. So as we set price targets, goals, that's what this is about. So one of the things that I use, yes sir, bro. One of the things that I use is the indicator, the RSI. So if you follow my newsletter, we're long Roku. This stock trade's really good for my strategy. What's up, Mal? So this strategy, Roku trades the money flow strategy really good. Some stocks do it better than others. We have our breakout here, we have our breakout here, and we had a big breakout here. And you'll see Roku really respects the RSI. Whenever we get a RSI, you see it kind of topping out, and then it moves sideways. We got one here, and then price kind of moves sideways. So now we're getting one here. And it's not foolproof. If it was foolproof, we would just sell the whole damn position. And if I was day trading, or if I was trading on limited funds, let's say I was in Roku, I bought $500 worth. On these RSI extremes, I would probably sell half. Because you need money to get into other trades. And you don't have the luxury of kind of waiting around. So, no one else. Okay, you guys can hear. That's good. So this would be target. I actually I sold some yesterday, if you remember me saying, so I could get into ESPR. Was pretty confident we were going to hit the target today. So, I probably won't sell again because I just sold right here, but we're up now, 5%? Maybe I will. My position's fairly large. So I should sell some right in here. Anybody should. If you notice, our volume is still low, but the day's still early. So we're starting to get a little long in the tooth here. Still a little bit of room on the ADX DMI. So, ultimately price is what leads the way, right? These things here are just going to help us kind of finesse it a little bit. Just kind of help us take the edges off. So pretty good. Pretty good. What's another one that hit our target? So we got Roku hitting the target from the newsletter. Let me check the newsletter real quick here. What do we got? ESPR, DBX, work. Oh yeah, work. Let's look at work. So we got work hitting the target today. Boom. And it's already pulled back a little bit. Still up nice. We'll take 2-3%. I'm not greedy. Sometimes if you watch the after hours and you understand, you follow your charts, you're like, yeah, that's going to hit it. So you probably could have sold this in the after hours for a little bit more here. But not only did it hit the RSI target, which you'll see a lot, it also hit previous, resistance. So it stopped right in there. Remember, these are kangaroo tails I talk about where they pull up and they get back in the box. You kind of ignore those. Sometimes that'll confuse people. Why don't you use that? You ignore that. You'll see those on the top and the bottom. I call them kangaroo tails. People call them different things. So stock did exactly as I would expect. These are assumptions that I make. I make the assumption that when it hits the zone of resistance, it's going to stop. Maybe not forever, but for a minute. And so they give me logical targets and almost always those coincide with the RSI. So I always default to the RSI first. If the target, and then, you know, I scale it off. And then if the target's a little further away, like the next target would be here, you know, we'll just wait. Maybe it pulls back a little. That's cool. And then we give it a minute to run up. So we saw Netflix do the same thing. Now look at Netflix. Target is 560. This is where you got to be patient on these breakouts and don't get greedy. You know, it's easy to get greedy. We got long Netflix over here. We got the big move up. And then it's kind of disappointing to watch it pull back. But as long as this moving average configuration of the 5-day, the 10-day, the 20, everything is still pointing up. There's no need to get worried. It's just digesting this move. I know it's hard, you know, not all stocks go up. Like sometimes they digest the move. People take a little money off the table. So we're closing in on the RSI, but what is my target? 560. So we're probably going to hit the RSI and previous high at the same time, which is very common. We saw it just now in work. I mean, it's probably 70% of the time the first target will coincide with the RSI hitting 70. So that's why I do it. It's just a logical way, like I just read in The Science of Getting Rich, that, you know, it's a way of visualization. So you can visualize your target. You can, you know, have faith in that target. Why? Because price has been there before. Price has memory. And so once you have faith in that, you see why I tell people to read that book. One of the books that'll help you the most with your trading is The Science of Getting Rich. And it has nothing to do with trading. It's about mindset. So you see, this is price having memory. Price going to where it was before, having memory. Price likes to do this, man. It likes to bounce off where it's been before. You know, and over here, look, you see it stopping where it was before. It doesn't hold it forever, but it stops it for a minute. It's just the way price works. And then look, if we take it over even further, price was there before. And so all that does is just give us a sense of where it's going. We can place targets if we're trading. You know, if we're not trading, we can use these as opportunities to buy things. You know, like we did, we had a chance in Intel. You know, you can begin to map these zones inside of Intel. This is the kind of stocks that I like to trade inside of my retirement a little bit. I don't do it a lot, but if it's the right stock, because I know without a doubt this gap will be filled. It's in my buy and hold anyway. Let's say I'm putting in some new money. I'll wait for this setup to stop. Each day I'm drawing my circle. Each day I'm looking for the bottom. I'm like, is this the bottom? And I draw my line. Nope. Is this the bottom? And then I draw my line. And one day it'll be the bottom. And then the MACD will turn. I'm like, oh, cool. So I start buying. Now, what if I'm wrong? I already own it. It's in my buy and hold. There's no, you see what I'm saying? Like, you're just buying more of some shit you already invested in. So trading around buy and hold positions, you know, can be very lucrative, because you already own it. So if it goes even lower, who cares? So it's almost like trading and not having to worry about a lot of things that other people worry about when they trade. You know, so let's say it runs up. Let's say it runs up and gets exactly where I anticipate and goes. Remember, price has memory, right? So look, memory. Hold on. Got too many cameras going here. Memory, 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 memory. It just stops there. Bang, bang, bang. Where do you think it'll stop? Probably right there. For a minute. We don't know how long. So if I'm trading in my retirement, I could have bought an extra 100 shares, flipped them up here, just generated $600 in income in my retirement. I could leave it there, or I could take that money out and put it into something else that's breaking down. You know, we can move it over to FE. Same thing. Big drop in FE. Now it's doing the same thing. Price has memory. Look at this memory zone being built. Now, when I say memory, most people are talking about support and resistance. Look, see it being built? Remembers it, remembers it, remembers it. You see how if you think of it as price has memory, it makes more sense than just support and resistance. And then, you know, we're going to see it up here. And sometimes the levels aren't perfect, but they're pretty damn close, you know. Like we're seeing it up here. Well, shit, I got that all jacked up. Where it's coming across. So when it goes up, guess where it'll probably stop? Same zone, same thing. It'll just play this game out over and over. So we looked at Roku, we looked at work, trying to, Snap is moving real slow for us. See, it kind of went the other way. had a little breakout. Now we're pulling back. You can't let that shake you. All this is doing, remember, unwavering faith. So I have 100% faith in my strategy. I'm not doubting it at all. I fully anticipate it's going to 26 until it doesn't. Now, if it doesn't, and it breaks the level, price has memory. If it breaks that level, well, now we change our mind. Like now my faith is changed and it's now going down. So I just assume it's going to go, if I can get this off, where it's been before. And so the direction, once it goes above the green line, remember, the direction is to the upside. So with unwavering faith, I just assume it goes to the upside. Hold on, I got to plug in over here on YouTube. Make sense? Man, see how this makes stuff so easy? So easy. Look at Uber. You want to talk about price has memory, man. Now remember, it has memory till it doesn't. Once it doesn't, we go to the next memory zone or the next support or next resistance, depending on the direction. If we're going down, I'm assuming it's going to hit, there's levels to the downside. There's going to be levels to the upside. So it just depends on what direction you're going, which that's determined by what? The stages. So as we look at stages, we can look at a chart and go, okay, I'm in a stage 2. So I make the unwavering assumption that we're going up. I don't need to look at anything else. I don't know that we're going up. I'm just assuming we're going up. That's it. It's just an assumption. And so I don't need to know. And where would it probably go? Well, where it's been before. So my target assumption is $38. You see price having, but guess what? Look where we're getting hung up. It's where we've been getting hung up. So now we're in this giant box of memory, memory, and it's just bouncing. If we need to break through it, and if we do, I just assume we are going to $38. Now, we could continue on and on and on. So we watch the RSI, we scale it off, and then you get a runaway. Like I've been saying with Tesla, you get a runaway. What do? You let it run, but you're not buying here, okay? Why? Because I have unwavering faith in a strategy. If that strategy is not working perfect for whatever stock you happen to be looking at that time, that's not the strategy's fault. That's you looking at a stock at the wrong time. And so when I was getting mad about Tesla, I'm not getting mad that it's going up. It's doing what it's supposed to. What I'm getting mad is there's people dumb enough to buy it at such an extended price. You shouldn't do that. Now, that's according to my strategy. You may have your own strategy. Shit, you may have no strategy. Maybe that's a good plan. Just have no strategy whatsoever, no way of valuing stocks, no way of determining an entry or an exit. If that's your strategy, cool. Like, just do whatever. But if you have one, you understand what makes it work is your ability to stick to it even when shit doesn't look right. So even when your friends are saying something or an article saying something, you go, no, I have a strategy. And until you can do that, I promise you, you'll never be a good trader. You may temporarily get right. You may because, blind squirrel finds an acorn, man. Blind squirrels find acorns, right? So, you just buy some apple because you read an article 20 and it goes up. Cool. Great. That's good. I've done the same thing. It happens. I'm in Square. Same thing. I'm like, oh, look at this. It just rolls up. So there's nothing we need to do as long as the price stays above this green line. There's nothing we need to do. But I can't buy it when it's on the extremes. I got to buy it when it pulls back to this green line. Okay? Simple as that. That doesn't mean it can't keep going. So every time price pulled back to this green line, look what? It was a chance to buy. If you want to buy into a trend that won't stop, it's a chance to buy. But if you're buying when the extreme, then look, you're buying at the highs, man. Now, you could make the argument, yeah, but it's just gone straight. Yes, in this particular stock it has. That's not normal. The way prices normally move is they move sideways, they run up, they move sideways, they run down, they move sideways. So if you learn this skill, you can trade for the rest of your life. You can ride every Tesla, every Zoom, as long as you're following them, and as long as you catch the breakouts, no stock will ever leave without you. It's crazy, man. So let's look at gold. Like, should we buy gold? I don't know. Should we buy gold? If we just look at gold and we do the same thing and we look at price movement and we go, what stage is gold in? A 1, a 2, or a 3? Well, we know what Tesla's in, a 2. We know what Apple's in, a 2. We know what Square's in, a 2, right? We can just look at it and see. So what's next? Not a 1, 3. And so as you watch price move, and you'll see it like we were just looking at Roku. And you get better at seeing it as you do this game a minute, okay? You're not just going to read my book and go, oh, yeah, I got it. It's not how it works, man. There is such a thing as called experience. We see a tiny little pullback and then sideways, and now we're running up, right? So we got stage 4s, stage 1s, stage 2s, which stays here. Stage 2 continues, stage 3, a tiny little stage 4, and then a stage 2 breakout, right? Right out of the newsletter. Boom, 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 boom. Now, we don't know how long these stages last. So a lot of questions I'll get, well, how long do you think? I have no idea. I have no, my ego is not big enough to think I know what direction a stock is going or for how long. I've traded long enough and been in the markets long enough to know I don't know shit. No one does. And if you think you know, you're an idiot. You have no idea. You just know what you're seeing and you're making an assumption off the past, which is the only way we can trade. The only way we can trade, because there's too many variables. Nobody knew about coronavirus, although there's a lot of people taking credit for the market pulling back. And it's like, dude, come on. You didn't know about coronavirus. We don't know that all of a sudden Trump's going to cause an embargo. We don't know all of a sudden everyone's going to have to go tech and then Zoom takes off. And there's a lot of people go, well, I knew Zoom was going. No, you didn't. You didn't know it was going to do that historic run. It got lucky because of it. And that happens. Cycles change. The business cycle changes. Interest rates go up and down. Businesses go out. CEOs commit fraud. Like all these things go into making up price movement. But ultimately, it just moves based on fear and greed. Fear and greed. So when you look at a square going straight up, that's just greed. It's not bad. That's just what we call it. Well, I just call it a stage 2. And I don't even need to have any philosophical thought on it. You just ride it. And I know that whenever stage 3 occurs, the RSI is extended. Like I just have that belief in my trading. And so what that allows me to do is then have a system. And I can trade lots of stocks. And so I can look at this. I can trade 30, 40 stocks. And I'm not day trading. While I'm at work making money, I got stocks making money. So I want to be positioned on the right side of this, on the stage 2s. And I want a way to clearly look at something and go, yep, stage 2 breakout. Without a doubt, unwavering faith, 100% certainty, that is a stage 2 breakout. Where's my target? I go to previous high. If there isn't one, I use the RSI. I scale out until what? Stage 3. All stocks, even Tesla one day, will go into the stage 3. And people will say, what do you think I should do? I'll say, I don't know. If you're trading it, what do you think you should do if a stock is topping out? Maybe it's not. So let's say it pulls back. And then what? It'll stop. We don't know how far back the pullback is going to be. So I just assume it's going to go to the previous low. I just make that assumption until it doesn't. And the way it doesn't is I track it each day as the bars go down. What? Looking to draw price has memory. I'm looking for levels. Did it ever stop here before? This one it did. Got down a little bit lower, and you can see where it begins to put in that level. So my confirmation as it moved down, this is Snapchat, right here, it held it, and then held it a 4th time. I'm a buyer. This is a level of support. Price moves sideways, price moves up, price moves sideways, price moves down, price moves sideways. And so I witnessed it. See, it's very subtle. You might not have saw that because you're busy doing other things. I don't know. I don't know why you wouldn't have saw that. So I'm watching each stock like this. So I follow 40, 50 stocks, and I'm waiting for that setup. I'm not going to be right all the time. It may turn down, okay? It could turn down. And if it does break memory or support, whatever you want to call it, I assume it goes to the next level. I just make that assumption until it doesn't. When it doesn't, the first thing that's going to happen is the histogram's going to stop. I'm going to be able to draw a line sideways. Price is going to start to move to the right. And now what do? I make the assumption that, oh shit, we're about to go into a stage 2 breakout. When that happens, unwavering faith. It's the same every time. Price rips above the 220-day moving average. Let's go to Tesla, see if that wasn't true every time it moved. Did price rip above that green line when it started its move up? Let's look. Well, it happened over here. You can see it happened again here, and again here, and well, right here it happened, and over here we see it happening. Like, it does it over and over and over and over. And so every one of these were, you can buy, 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 you can buy. And you can move in and take some weight off and wait for the breakout, add it back on, wait for the RSI to hit, take it back off, because you never know, at some point it's going to turn and then go into a down move. But we need a way to play it. If it just keeps going up, you need a strategy to get back in, right? Sounds like work, doesn't it? Like actual skill, like a pattern, a plan, like you'd actually have to look every day, all the time. That's what I'm saying. And one of the things that begins to help me is it's a lot of shit, man. I'm drawing the box all the time. You'll hear me talk about that. What is that? Memory. But as price comes into these stages, stage 3, stage 1, it forms boxes. I mean, we can just look at chart after chart, man. You'll see these boxes form. Let's think of one. ESPR we just got into. Let's see. Can we just find some boxes? Like I do this all the time. I'm just looking for boxes, bro. Let's see. One there. We technically have one here. You see those boxes? These zones where price has memory? This is getting micro, man. Man, if you knew what my brain comprehended. Like, you see what's happening in here? Man, you see how sexy that is? You see where price goes sideways? Man, if you get what I'm saying right here, it'll change the way you trade stocks. If you don't even use the other shit I use, if you get the concept of the box, and when price breaks the box, what it means, and when price breaks back into the box, what it means. You could literally, there's people that trade, I know, I just read a book on trading in the box. All he does is trade the box. He's not even looking at the 20 or the others. He's constantly drawing the box and waiting for the break above or below. Like, let's look at which one's in the DraftKings is in a big ass box. So look how exciting this gets as you learn this, because now as we begin to every day, where is price in relation? What stage is it in? Where's price in relation to the 20-day moving average? Is it doing a box? Where's resistance? Where's support? Where's the RSI? And as I begin to look at this, and all around, are we in a stage 1, stage 2, stage 3, or stage 4? That's it. Once I know that, I can make assumptions. I can look at this chart and say, okay, well, if it broke the box and ran up, probably going to go to 42. If it breaks the box and runs down, probably going to stop here at 27. I'm just making the assumption. Why? Well, that's where it stopped before. I don't know. I have no idea. I have no idea. But you see, now I have 2 targets, right? And so as you begin to just analyze this, you can say, okay, which side should I be positioned on? Are we above the green line or below the green line? We're above it, right? And then on this one, we got to back it up for a minute. So as you back it up, that may confuse you if you're just looking at this, but you got to look at the history of it. Where did we start at? Look, see that box? Dude, you need to PayPal me $1 million right now for what I just showed you. I just saved you like 10 years of heartache, going to gurus, buying shit. I spent 70 grand probably on training courses, books, options classes, boot camps. I can't even, like just infomercials, the shit that I've spent money on to come away with and figure out, and then I just hand it to people. Listen, you see the box? You see it? There is no box here. It's just going straight up. Look at those moving averages. Straight up, 5, 20, 10, 5, price aligned, price going up. There is no box. There's nothing to do. You just let it run. You say, well, how do I know when it's to stop? Well, your first signal is this. But this can last for a while. Fear and greed move the market. So as greed takes us higher and higher and higher and higher and higher, at some point, it's going to put in a pivot point. It's going to stop. And that day will be the high. And it happens on all stocks on planet Earth. All of them, even Apple, will one day put in that and it will go sideways. And when it does, it's going to go into a stage 4 decline. Even Tesla will go into a stage 4 decline. And instead of guessing, I wonder what I should do, you could position yourself. You could say, okay, well, shit, I'm a trader. I've just made 400% or whatever the ridiculous sum is. Maybe I should lock some of that in. And so you remove that money. But here's what I like to do. I don't just remove the money based on some whim that I'm thinking, maybe $500. I actually have predetermined. So when I enter the trade, I already had a target. Unwavering faith, set my target. I know how much I'm going to take off. I knew back 2 months ago, I knew what I was going to take off. I don't need to renegotiate it or try to figure it out. It's a strategy. All right? So you never will get that good and can trade it that well while you're playing around doing other strategies too. So you don't ever, there's no consistency. You're just kind of doing a little this, little that. This is how most people trade. You do a little this and little that. You see this working, so you want to kind of play over there a little bit too and get in a little bit over here, and you just don't master shit. You're not actually in tune or in the money flow following this one stock. You're not going deep with this for a friend. I mean, you're not sitting, I'm telling you, the moment you do what I'm talking about, your trading will change. But it's hard to get there. Most people have to dabble for 5 or 6, 7, 10 years before they can settle in and decide to master something, because they want to do a little bit of everything. Part of this process of understanding the money flow is price moves left, price moves up, price moves left or right, and price moves down. Part of that process is just getting some idea of understanding value as well. And what type of stock are you playing, and what sector is it in, and where are we at in the business cycle, and what about interest rates? Where's gold? Where's oil, right? Where are bonds, and where's the S&P? And so as you look at all of that within the construct of the stocks that you're trading, you can understand. So when you see people, well, the market's too high. Okay, that didn't have anything to do with Zoom, right? A therapeutic stock will do what it's going to do, irregardless of what gold is doing, bonds are doing, right? Some stocks trade in their own little world. Well, if you don't know that, then you're going to be the guy going, well, the market's too high, so you start getting out. Instead of saying, okay, cool, the market's too high, what might go up if the market goes down? And you begin to plot and plan. Okay, now I need to follow these 10 things because these 10 things can probably move up when the market moves down. And so as you transition trades and you start taking money off the table over here, you start looking to put it on the table of things that might go up or be defensive or go, see what I'm saying? Now that's big picture though, pillar number 7, man. And so, it's hard to get into all of that when you're a little here and a little there and kind of doing this. And sometimes you're a day trader, and then today you're doing it's hard, man. Your brain can't hold it all. So we see bonds selling off. Bonds are in a stage 4 decline as the market moves up, which is what it should do. Bonds are functioning properly. Look, bonds are coming into an RSI extreme low zone, and we're coming into support zones. I'm drawing my lines. Memory. Are you watching bonds, or you don't give a shit because all you're watching is Tesla, and you don't see bonds are starting to get set up? Why would bonds be getting set up? Maybe the market's getting a little heavy. Maybe the market's overbought and it's getting ready to pull back. That doesn't mean Zoom pulls back, but it means the general market pulls back, which sets up trade opportunities and things that might go up when the market goes down. And so you begin to look, maybe I should take some of these profits from Tesla and move it to, I don't know, Maybe bonds are setting up. So you follow the TLT, which is the bonds, 20-year government treasury bond. So what stage is this stock in? 1, 2, 3, 4, right? Newsletter, 1, 2, 3, 4. But we got to be on this every day. Do we have a bottom? We've got a 3-candle bottom. Histogram's going our way. And we've been here before. So, we'll see. Where's gold? Gold's turning around. Gold broke out today above the 20. So what happens when gold breaks out above the 20? We ran up. And then here's where it gets tricky. This is why you got to master the box, man. This is why it's so important. Hold on. Look at this. You see this? You see this zone? Or all of a sudden, listen, this is crucial. You see that green line? It's sideways. It's sideways. What happens when it's sideways? 1 or 3. That means there is no trend. It's not going up and it's not going down. So what does that mean? These are zones of consolidation. This is where people, if they are using moving averages as their only way of trading and they don't understand the box and the philosophy and the way price moves, when you don't understand that, when you get in these boxes, you're going to get confused. You're going to get knocked out. Your stops are going to get hit because these boxes confuse people. And once you learn these levels of let me clean this up a little bit. Man, this chart is sexy, man. Let's see. Look at this. You don't think price has memory? Look at that, man. Look at that, man. What happens when it clears the box and it's above the 20 and the histograms go in this direction? What happens? It runs up, man. When it runs up, it's in a stage 2. And the guy says, well, how far is it going to go? I don't know. It doesn't matter. Because when it goes up, it's then going to stop. And it's going to go sideways. And the game plays over and over and over and over and over and over, whether we're going up or we're going down, we're going sideways. And so then you just got to make your positions based on what do you think? Does this stock have upside? You know, I've found the way to play that as an edge. See, the market gets really tricky when everything gets overvalued. For me, for other people, that's not tricky. Why is that tricky, Gerald? Because most of my trades are based around undervalued assets. I like to flip houses that are cheap in high-priced neighborhoods. In other words, I want to find one that's out of whack, and I want to look at it around this pattern, and I want to catch it, and then around when it's, fully valued, I may give up all my shares. Like I may not want to keep work. Maybe work is at full value right now. So we're at $34. I think the actual analyst value on the stock is $36, right around 36. So we got in on the breakout. Stage 1, stage 2. Stage 1, stage 2. Oh, you see it? 1, 2. Do you see the box it was in? Oh my God, man. See, you have to have points to be a box. A box needs what? You got to have 4 corners, right? It doesn't have to be corners, but you need a way where price holds these zones. And it takes a minute to do this, man. It takes a minute. When price breaks above these are your stages. The 2s and the 4s, downs and ups. Nobody knows how far that's going. The only edge you could give yourself is there are people like Kelly Blue Book. There are analysts. There's people you can buy. There's subscriptions you can get where you say, hey, cool, $200 a year. I need your guys to tell me all the time. If I have a stock and I want to just come over and I want to just type it in, I can get a dirty estimate what you think, because you went to college, you have a degree, you studied finance, you studied marketing, probably have an MBA. You're going to keep an ongoing analysis of this company. And when I come over there and type it in, you give me that number so that I can focus on doing this and looking at the big picture and seeing where are we, you know? So where's oil right now? A lot of stocks in the oil market. We're down today. Oh, that was yesterday. Brent doesn't trade in real time on so it's up 1% today. God, oil's been in just this. Look at this terrible, gigantic box it's in. Look at this. It's terrible. We could move this in, I guess. We have basically gone nowhere. It's basically been the same price, dude, for, I mean, maybe a little difference for what, 2 months? After this big move up that broke out of what? A box. How do you know how big this move is? You don't know. Nobody knows that. So when you're looking at DraftKings, DKNG, and we're like, all right, cool, where's the box? I mean, I'm right now I got the luxury of past price, but in the future, you got to be following these every day. So the meat of the trade was what? This. This is what you're trying to trade, bro. This looks the same every time. Look at this. What do you see with the moving averages? 5, 10, 20. So here's what I do. I make the assumption this is just going to keep running until it stops. What happens when it stops? It's going to go sideways. It's going to form a box. That takes a couple weeks. I can't make that determination in a single day. That takes weeks to play out. And so every day, I'm looking to put the top in. Maybe today's the top. Put the circle. There's your pivot point. Draw the line. Nope. Uptrend continues. 20 still up. 10 still over here. 5 still here. Nothing to do until all of a sudden, what? When this shows up, I need to start scaling out of the trade. Why? Because it's topping out. It's gone too far, too fast. That's all this measures. Doesn't mean the run's over. Doesn't mean the stock can't go higher. It just means right now. So if you're a trader, that's real important. It's real important. But it's not day trading. And then look, eventually it starts to go sideways. And then it drops under this green line and everything goes the opposite until what? Until that stops. And when it starts, I assume it's going to the next level, man, until it puts in a bottom and then it holds it. And where? So right here, what do we have? We have a new breakout. The stock was breaking out just like it did back here. Has it gone down? No. Trade hasn't ripped though, but we're still in the box. We're still good from the breakout. So it broke out. We had a little scary day right here. And now look, we're just trading this big ass box. When it rips higher, what? We assume it's going to the next one. Same game plays over and over and over. Yeah, man. We took profits from Roku today. Why? Look at that RSI. It's coming in, man. Look. First sign that this run is over. So I assume this candle's the top, and I'll be assuming that. And then if it's not tomorrow, cool. And if it's not the next day, cool. If it's not the next day, even better. And then one day it will be. And guess what it'll do? It'll put in a box. You'll see it start to go sideways. Now what can we do? We can go, okay, let's go read on this stock. Is there any reason to believe it continues higher? I said, man, they've really been growing and people think it's worth $90. Okay. Doesn't mean we can't take some off here though, because we just had this big ass move, right? So we take some off, it pulls back. I'm waiting. I put that money in some other trades. This is a month. We could have been in and out of other trades, right? It's a month. And then what? We get the breakout day. And I've had buying holders tell me, well, you could have just bought it and rode it all. Because look, go to the weekly let's go to a weekly on Roku. A buying holder will say, yeah, dude, but you just bought it and held it. It went up. I know. That's the edge. That's the edge. That's what makes trading work, is that you're playing a game that statistically goes up. So it's like walking into a casino and they said, hey, Mr. Peter, here's a game for you. You're going to lose all the time on this one. Yeah, I don't want to play that. Well, here's one where most of the time you get a winning hand. I'm like, really? Yeah. And then you go, wow, man, I got to figure this game out. And you begin to set rules. And so if most of the time stocks go up, quality companies, not all companies, it's not that hard to figure out what's quality and what's not, okay? That's not hard. That's just getting off your ass and doing a little research. It's not that complicated. There's people that went to college for it. So no different than looking at real estate and going, yep, this Taj Mahal is nicer than the ghetto. More valuable. Like, you can make assumptions based on sales and earnings and the sector they're in and what that sector's doing and where interest rates and bond. Like, that's what Buffett does. Sits around all day reading. Except he doesn't look at charts. He's looking at companies and their books. When Buffett is right and a stock goes up, or let's say he's right, you know what'll happen? It'll break out. It'll break out. See, what a trader is trying to do is to ride this up, take money off, put that into another trade that's just starting this. So while this is doing this, his money's rolling forward. Traders trying to grow it fast, trying to outpace the market, get in, snatch money, downsize, take that money, put into another one. Like, that's what traders are trying to do. They're trying to flip merchandise, right? They're not just sitting on it. That's buy and hold, and that works. The reason trading works is buy and hold works. That's the beautiful thing. So we just pick any stocks, man, like just randomly. Let's pick Intel. Now, as you watch these as a trader, if the charts aren't pretty, you see how all of a sudden the 20 starts getting challenged here? But look, it's just a box, man. It's just a box. And you should have been able to identify this pretty quick. I don't need the whole damn thing to identify it. I'm identifying it right in here. Once we put it in and we're here, I'm already drawing my line. So I'm just assuming that's what it's going to keep doing. So as a trader, this doesn't get me excited. I'm looking at it. It's all confused. RSI sideways. You're in a box. I don't know. Shit. Maybe we go down. I don't know. See what I'm saying? If I'm just looking at that and you go, hey, what do you think of this stock? I don't know. It's in a box. You should have bought it down here. Well, duh. Like, everybody's like, yeah, no shit, but I didn't. I know. Wait. What I'm saying is I want to trade them like that. Like, I want to get in the cycle of the stock. I want to catch it. Boom. Now, this is trading. Over here, I don't know. I don't know what this is doing. So I'm looking for setups. You get what I'm saying? I'm looking for setups. So Intel wasn't exciting to me until what happened? They missed earnings. Other people's problems are my opportunity. That's real estate. You understand, you're buying a house from a guy that, why don't he do the deal? Why is the guy losing the house not a deal, but for me it's a deal, and it's both the same house? Same in stocks. Today, if you own this, that's not a good deal. There's people going, you think I should sell this? I'm like, I don't know. I see a stage 1 getting ready to run up to a stage 2. So if you knew what the hell you were doing and you had some sort of skill at tracking, following stocks, evaluating their value, what scared you here, you might go, shit, I could trade my way out of this. I could take this little loss I got going on right now and trade my way out. Or through fundamental research, you realize, no, this thing's broken. I got out of ING and I just stopped trading it. It's broken. It's broken. That some of that you might call a gut feel. It's just not it's not working. So I each time I kept lowering the trade. We came across this stock, I don't know, a year ago, and it had done a perfect money flow pattern. So I was like, whoa, let's get in on this. And once I get in, I want to keep doing it. I want to ride all the stage ones, take it up. Like I've been trading Roku for a year, just taking money in, taking money out, taking money in, just buying chunks of the movement, just riding the ups and then taking it down. Some of them you can just get into the flow. You'll see the pattern, right? Well, what if you get it wrong? Facebook is one that I trade like this. Like I keep core positions in it, and as I trade it, I just begin to up the weighting, take it higher and higher. But what I'm looking for is the breakout. The moment the breakout happens, I want to be all in the sense is this, I've committed all the capital, I'm a commit to Facebook. And when do I look to change it? When it puts in a box and goes into a stage 3. I have no idea when that is, but it happened up here. It almost always follows this. And so that's my first sign that the money I've made on this big move here, I need to get it out. And I need to go back to my core position. Why? It's not that it's not set up the way I like to trade. I like to trade from down here going to up here. I like to pull back. That's what I'm trying to do. I want to catch these patterns. Now, inside of this, you can modify that. You may only like to catch the runaways. You only want to trade stocks that are doing crazy, moves and then watching them very tight. Like Tesla, you could just watch it tight every day. And all you're waiting on is these boxes. And once these boxes appear, you get your money ready and you get ready to position to the breakout of the box. And then what? You're going to ride it up to the next one. Like you want that. You're looking for these stocks that are moving. See, this pattern looks different. It never started from the bottom, right? Never started from the bottom. And if you're a short seller, you're doing the opposite. People ask me all the time, do you short? I'm like, yeah, but not in a bull market, dummy. You don't short when the market's going up. One of the hardest things you could possibly do in this market is go to individual stocks and go, I think I'll short Tesla, or I think I'll short Visa. It seems very overpriced. And like, no, man, everything, like all the pullbacks have been tiny. Look, you see this configuration? Remember, 20, 10, 5, RSI goes extreme. This is where I like to start trading. If I'm coming in on a stock, this is what I'm looking for. So among the 50 or 60 stocks I trade, this is what I'm looking for so that I can catch this and what? Ride it up until it goes into a box. Now, if we get over here and they say the company's worth $55, guess where I think I make the assumption that we're going to just continue doing this, Maybe we have a little bit of a stage 4, but then it turns again and rips higher and it just keeps playing this out, right? So as long as you have expectation that the value is higher, you can just keep playing that. You just keep buying the breakouts. I didn't get in on I'm sad to say I'm still in my core position on Facebook, but let me explain something. If this happens to you, my core position is like 25 shares. I just keep 25 shares in Facebook, irregardless of what it does. If it sells off, cool. Why? Because I'm going to put 75 on when it pulls back and the RSI gets extreme and it starts to go sideways and it's undervalued. I'm going to look to put a bunch on and then sell it higher, which is what I did up here. But on this breakout, this is it's trading at a premium. I want to say like 30% to value. I didn't add, and it was purely I just didn't. I just thought other stocks had a better upside, but I'm still in the core. So the point I'm bringing this up, I'm not selling on this. Even though it would normally, if I was trading, if I would have bought the breakout here, if you were to ask me what should I do with Facebook, I'd say, well, if you're a trader, you should be taking profits. I didn't take that trade. So what am I looking at now? Well, I'm assuming it's going into a stage 3. I anticipate it coming down. It seems very overvalued, but maybe not. Maybe the people who value stocks reevaluate it. It comes out and they say Facebook's worth 325. All right, it's time to get our brain back to the upside. Right now, I just feel it's overvalued. What's one that I'm looking at getting in? Space. You see the box? See it? What am I looking at? We're in a box. There's support. The histogram's turned. The indicators are rolling over. It's going sideways. Sideways up. Sideways down. Sideways up. Analysts have a $26 target on it. Oh no, there's my edge. Guess what that coincides with? Previous high. There's my target. It's already the strategy, and we're watching the RSI. So this is building up for you. You start buying. It isn't confirmed until it breaks above the 20. The moment it does that, with unwavering faith, you assume it's going to go up until what? Till it hits the target. There you go. Perfect swing trade. Perfect. That's it. So any stock you pull up, that's what I would go through, man. Oh, SOL. Spec play we're looking at. You see the box? Oh, you lucky bastards, dude. The Illuminati is going to kill me. You see this? See the box? The box happened before what? A big ass up move. And now we're doing it again. Remember DraftKings? See the box? See it? Big ass up move. See the box? Down move. And now we're forming a big sideways one. Man, you just can't give out stuff like this and not be taken out, man. So DraftKings were long. It's a stage 2 breakout that turned back into a stage 1. Okay? That's all that happened. That can happen. It starts to break. This was our 1, and then it just stops and it goes right back into the 1. Do we get rid of the shares? No, we're already in the trade. We're already committed to the trade. The upside target is 42. The only reason I would change my mind is it breaks support and goes much lower. And even then, I may just decide, hey, I'm only going to sell half the position, because I truly believe, based on fundamentals, when this everything, but maybe not. Maybe coronavirus lasts 3 more years and this company just gets freaking hammered, right? But right now, that's not the case. So I'm trading based on what I think the value of the company is and what pattern we're at. And I got to make a decision. If these lines break, how much of it do I want to ride down? And so as a trader, you could start set stops. You don't have to get all the way out. Let me help you with something. You could do lines in the sand. You could say, cool, this box here, if it breaks, this is the box right now, right in here. If the box bottom breaks, sell 25%, sell 50%. Why? Because you may be going into a stage 4 decline. We don't know how long that's going to last. You didn't know how long this was going to last. That stage 4 could last for $15. Do you want to hold 100 shares for $15 down? Maybe you just want to go 75, and then it breaks that when you go to 50, and you're willing to ride 50% down. And then when it stops and starts to go, what do? You start to put it back on. You can do that. That's not day trading. That's weeks trading. That's months trading. That's like 2 weeks ago, you made a decision. Now fast forward 3 weeks, you got a new decision as you draw this box. This box is alive. Every day a new bar happens, and every day there's new support, and you continue to draw it. And as it moves, what is it doing? It's sideways. Stage 1, sideways. We think the value of the company is higher. These would be the zones that tell us that, something's gone wrong. So you don't have to commit capital as it goes down. You could commit capital as it breaks out. So you want to commit capital into an up move, right? Just ways of thinking about the money flow. Second wave for sure is coming. Could be, man. So Snapchat was a bet on the presidential election. I guess the Democrats are not going to put money into Snapchat. I thought for sure we were breaking out. You can see it, but now we're pulling back. Where's my line in the sand on this trade that, okay, it ain't working? Right there. See it? It goes all the way back to here. What do we do? So you got to make these rules right now. I'm long Snapchat. Not that big a position, like 150 shares. If $20 is broken, I'm going to sell probably half of this stock. And I have it written down. I don't remember half. And it'll probably come into here. You could just step aside, just say, well, shit, my thesis isn't working. I'm out. And you just get out and just wait. Let it set up. It's not a stage 2 breakout, so it's not going in an upward momentum, right? It's not doing that. It's going down right now. But we took a trade in the upward, so we got to give it room to work, right? Remember Ulta? Big move up, and then look. Remember this? And if you got out of this, it would have hurt you. Watch. Stage 2 breakout. We got in right there. Runs up. What does it do? Missed our target by $1. This day right here doesn't look good. Shit's going the wrong way. But this was our breakout day. So, and this is a box. We got to give it room. Minimum was here and then here. You got to give the trade room to work. We're trading that it's going to 258. It did. It hit it. We sold what? Took off some. So now we've taken off the trade. But look, it's still generally up. So just like this ran up, pulled back, this ran up, pulled back. It's still going up. The direction is up, so we just wait. And as it goes higher, I'm going to scale out. Until what? Until eventually it's going to hit the top, go into a box, and then it's going to sail off. Where's it going to stop? Probably where it was before. Same thing over and over. See where it stopped? Where it was before. And what? Started going sideways. Support created it. That's your buy zone. 1 point, 2 point, 3 point, 4 point. Jesus, man. Below the 200 with an obvious top and the company's valued higher. That's the setup I'm looking for every time. Right there. Undervalued stock trading below a previous high, below its 200. That goes into a box going sideways. That's what I'm looking for. And as it runs up, I scale out. Why? Because it did what I thought. I'm making my money. That was my target. That's trading. That's different than buy and hold. So problem is when you come in here and you half-ass buy and hold and half-ass trade, that's why I advocate you got to split these accounts. Have buy and hold accounts, treat them differently than you treat a trading account. And when you trade with a purpose, a reason, get an edge. Why is this thing going to go up? What's the value on it? Where's my entry? Where's my exit? Where's my targets? How do I know if I'm right or wrong? And what direction is the market going, or that stock going? What sector is it in? I got to go. I got to go do some work. Good trading. If you don't have my book, The Money Flow, get it. It's cheap. Go to the newsletter, click my bio link. You can go and see what we're trading. This is delayed, but it'll show you what I'm doing. You can. All right, guys. We got anybody on here? Man, I always get about 30 on. Let's see. Yeah, man, Altus worked perfect. Let's check back in on T. What is going on? Holy shit, dude. So we're at the bottom side of the box on T. Now, so here's where I got to make a decision. I've been buying this almost every day. Just the nature of my business, I make money daily. Now I'm collecting rent, obviously on rental properties. I'll throw some money. And this is one that I've just been banging at. I'm disregarding these moving it. Look how sideways they are. I mean, the indicators aren't really helping us here. We're just in this box. The company's valued, I think most people are valuing it about $34. It was higher. It's been taken down. It's still above the 200, and it's a dividend stock. There's some balance sheet problems. The reason this offers opportunity is there's problems. If there wasn't problems, there wouldn't be opportunities. So the reason that AT&T could go to, say, $32 is the fact that it's undervalued. Okay? It's undervalued. But it has issues. A lot of companies have issues. But these issues are coming at a cost, so it's keeping the price down. That's what sets up for opportunity for us. It's generally going up. And so I've just been waiting on these zones and start adding. We had an amazing opportunity back here, but we're not there. These were good opportunities, and all the breakouts have happened basically at the same price, $29. It's pretty crazy if you look at it. If you were trading back here, this was a breakout, that was a breakout, this tried to break out, and each time it's just fallen back. And so now this what was a giant box is getting closer. It's coming in. The box is coming in. See, it's way down here, then it's here, then it's here, and then it's here. See how it's coming in? Most people aren't seeing that, man. What I just showed you there, as this price comes in, this and this should converge. And so the great thing about this trade, which I'm treating a little different, is you're going to get paid in the meantime. So you're going to collect a little bonus, 6%, to wait on this, to sell it somewhere up here, I'm thinking. I don't know when that happens. It's going to happen some point. Obviously, you can be wrong. But I like these. I've done this in stocks like Starbucks. I've done it in Verizon. Just these solid blue chips. They get under this 200. They get out of whack. They're out of favor. But it can't be like GE. GE has structural fucking problems. Couldn't pay their dividend. So far, that's not been the case here. That happened in Exxon. So far, Exxon's been able to maintain the dividend. It's trading way below the 200. This stock is setting up for the same thing. But if you think oil is going to stay low for a long time, that'll definitely keep this stock down. But if they work this out, if oil prices rise and, they work out their balance sheet, this thing could, pay you and then eventually get back up into the 50s. There's several of these playing out. That's not Delta. Delta's not paying anything. So we're trading based on hope here, which can be very profitable. So whenever Delta breaks above this 200, you need to be paying attention. You see this break here? Shouldn't have got you stopped out. Our zone would have been over here. And I don't get stopped out at the open, so we held it. Another breakout you add, and we're creeping up. Target's $36. This one's a little tricky. See that pullback? But it's still above your breakout point. You don't sell a pullback above your breakout point. You see that? You just don't. It sucks. Hurts to see it run up, give away all that profit. But this is above this. You don't sell it. You got to have stamina. Same with Ulta. There's the breakout. Pull back. You shouldn't have sold that. It's still above the breakout point. I get it. It sucks. 10% profit. Watch it pull back to nothing. But then look, patience paid. Once you commit to it, you need to stay committed to it until it actually changes. It was still above the buy point. All right, guys.